Today in crypto, that 15% Bitcoin drop has got some new investors shaken, and traders, of course, remain dismayed by the failure of Bitcoin to break out of the 2-year downtrend, which has been suppressing the market. $10,000 is proving to be an incredibly key level for Bitcoin. But there are a few things that make this Bitcoin halving drastically different from the previous Bitcoin halvings, and why Bitcoin is looking more bullish than ever. The Crypto Lark. This is where you subscribe for all of the hottest and all of the latest happening out there in the wild, wild land of crypto. A big thank you to Prime XBT for sponsoring today's episode. Prime XBT is a fantastic platform for trading a wide range of assets. You can trade crypto. You can trade top Forex like yen and euros. You can trade top commodities like oil, and you can even trade stock indexes like the S&P 500, all tradable against Bitcoin. All of these markets are tradable with generous leverage, and Prime XBT also does not require any KYC, so you can, of course, trade privately. Now, trading is not for everyone, and Prime XBT is only for advanced traders who understand how properly to manage their risk. There is a link down below where you can get signed up and start trading today. So the Bitcoin halving is now less than 24 hours away. I'm getting pretty gosh darn excited. Are you excited? You can feel it in the air almost. It's like Christmas Eve. I even got out my super rad Christmas sweater just for the occasion. The excitement in the air right now, it's electric. Very, very cool stuff. Now, I do want to just say real quick, though, before breaking down the charts for today and actually getting into some of those very surprising statistics about why this Bitcoin halving is different. Look, I know if you're new around here that a 15% drop, it can seem really, really scary sometimes. But please, if you are new to Bitcoin, learn to have some perspective. Bitcoin pumped by more than 160% since March. A cool down period is normal and healthy for the market. You can't get freaked out by 15% dips. And if you get shaken out by a 15% dip, then you don't get the 1000% gains later. But I know that there are some people out there listening right now. I mean, you guys must have trouble like functioning normally in day-to-day life with hands that are that big and that strong. I mean, legit. If you survive that 50% crash back in March, rock solid, man. Rock solid. 15%, it's like a cool breeze on a summer morning to you. Just 15%, man, nothing. Anyway, moving on to the charts. So the weekly candle has just closed for Bitcoin, and sadly, it did not confirm in our favor. We got rejected from $10,000, and back down, of course, we went. You know, in general, I'm feeling rather bullish on the markets at the moment. So long as the price is maintaining above that 200-day moving average, I am bullish on the markets. In fact, coming back down to test the 200-day moving average and then flipping the 200-day moving average from resistance actually into a line of support is a very, very strong move. And if we do bounce significantly from here, that would be really great to see. But I will not be full balls to the wall bullish on the market until we actually get a weekly candle that breaks out above that 2-year downtrend line. It is an absolute key line for us to break. And that's right around $10,000 right now. And $10,000 has proven to be a very tough area for Bitcoin to break away from. This is a major zone of historical resistance. And getting rejected on this attempt, really not super surprising. But anyway, key point. In spite of the massive bullish momentum that did pull us out of the depths of despair back in March, we are still in a high time frame downtrend until we actually break above $10,000, confirm it, and hold it. Also, while we may hope that Bitcoin just decides to retest $10,000 ASAP and then blast out that mega triangle to hit some new all-time highs, it may not play out like that. I know we want it to play out like that, but these are the markets. You don't always get what you want. But we could range sideways for weeks or even retest lower ranges of this triangle. That is definitely possible. Anything can happen in these markets, especially if the 200-day moving average fails to hold as support. Personally, I have a bullish bias overall towards Bitcoin, especially if we can see that golden cross confirm on the daily, which is about 10 days out right now. But yeah, 10K, it is the line to beat at the moment, and 8K is the line to hold. A very tight game right now. What happens next? Very hard to say. With a big hype event like the Bitcoin halving, anything is kind of possible. So we're going to have to watch and see how this plays out over the next couple of days. Anyway, what's very interesting is that this Bitcoin halving has behaved very differently compared to 2016. So here are some of the reasons why this halving is fundamentally different from actually the previous two halvings, and why the picture for Bitcoin, it is more bullish than ever. You just have to be looking with wide open eyes. Now, as we have covered at length, the price action has actually been quite different this time around compared to the previous halvings. I mean, if we look back at 2016, there is some kind of general rhythm that we do see playing out, with a big price run up before the halving, followed by a big dip immediately before the halving, and what many are now expecting, and with sentiment kind of turning around the market, would not be a big surprise, would be, of course, a bigger dip to come after the halving. Then after the big post-halving dip, what did we have in 2016? We had a few months of sideways market action, really not that much happening. Everyone was just kind of bored. And then something started to happen. The price started to steadily rise and to rise and to rise until it hit a crescendo of $20,000 around 18 months later. We all hope that a similar but even bigger scenario will happen this time. Heck, even if Bitcoin only gets up to a very low estimate of, for example, $50,000 this cycle, that will be game-changing money for many of the people who were able to invest in Bitcoin at these lows, especially since such a rise for Bitcoin would inevitably bring huge liquidity into the altcoin markets, where there will be lots of 100x's happening. But there are some other ways in which the 2020 halving for Bitcoin is fundamentally different from the one back in 2016. The first is to look at just how big the market has actually grown in the last 4 years. The market cap of Bitcoin is now at $160 billion. That is 16 times bigger than the $10 billion at the previous halving. Volume has absolutely exploded. In 2016, on the day of the halving, the total volume for Bitcoin was around $1.7 billion. Today, the volume is nearly $50 billion a day on average. That is incredible growth to observe as we approach this key milestone for Bitcoin. In fact, on April 30th, we actually had the second largest daily trading volume on record. But the huge increases in volume are also partially thanks to increased interest from big money players like the guys over on Wall Street. And yes, they have brought in additional liquidity, but they have also brought in additional manipulation to the crypto game in the form of futures contracts and of options contracts. And while this has allowed Wall Street to bet against Bitcoin, it also allows them to bet on Bitcoin. It has allowed people like Paul Tudor Jones to go long on Bitcoin with hundreds of millions of dollars from his fund. However, we can thank a large percentage of the volume that we are seeing come into the markets, not just on the fat cat Wall Street types, but on the retail buyers, Mom and Pop and Uncle Joe, all these people. As one example, Coinbase increased its user base more than tenfold since the time of the halving in 2016 up until now. Binance didn't even exist at the last Bitcoin halving, and now it is the most popular exchange on the market, doing $10 billion plus in volume some days. And we have seen volumes on platforms like Local Bitcoins absolutely skyrocket, particularly in regions like Argentina and Nigeria and Ghana and Venezuela, which are underserved by the bigger exchanges. And there are now more than 7,700 Bitcoin ATMs worldwide. This is up from around 600 at the time of the last Bitcoin halving. The number of non-zero Bitcoin addresses has also risen dramatically. On July 9th, 2016, it was a little less than 250,000 addresses with a balance above zero. Today, the number of Bitcoin addresses with a non-zero balance is around 37.5 million. Wow. There are so many Bitcoin addresses right now that soon not more than half of all the Bitcoin addresses will ever be able to own one Bitcoin. Digital scarcity is about to kick into high gear. And what about the Bitcoin network itself? Well, it is stronger than ever before. We've been covering a lot of the all-time highs for the hash rate. The total hash rate at the last halving was 1.5 million terahashes a second, which was pretty gosh darn secure, to be honest. Now, it's over 120 million terahashes a second. Wowzers, that is a mind-bogglingly big number. The most secure computer network on Earth is Bitcoin by miles. And the investment in Bitcoin mining has also soared into the hundreds of millions of dollars with the people like Peter Thiel and big corporations like SBI Holdings and Fidelity Investments and GMO, the Japanese internet giant, all throwing gigantic sums of money into Bitcoin mining farms. I always find it very, very telling to see what the big money is doing. Anyway, here we are on the eve of the next Bitcoin halving, and I know that we're going to look back in 2024 when we get to that next Bitcoin halving. We're going to look back here and say, wow, $8,000 Bitcoin. Wasn't that nice? It was so cheap. Why didn't I buy more? The reality is that in the coming months, we are going to finally shake off that downtrend that has kept Bitcoin subdued for the last 2 years, and we will start that slow but steady crawl up to a new all-time high, potentially 18 months away from now. It could be $50,000, $100,000, $300,000. No one really knows. We can all speculate, but one thing is certain for me. You have got to be in this market. The biggest risk that I see when it comes to Bitcoin is not actually holding Bitcoin and being in the game. Remember, of course, never put in more than you can afford to lose. Dollar cost averaging is definitely the chillest method for long-term success when doing crypto. Step one, you stack your sats. Step two, you chill. That's all. Play that long-term game. Most people aren't thinking past next week when it comes to investing. And if you're thinking a few years out and you're planning accordingly, then you have got a massive advantage over the majority of the rest of the market. Something to keep in mind. I don't have a question for you today. I just want to wish you a happy Bitcoin halving. And I hope that Satoshi will bring you everything that you wished for. And here's, of course, to 4 more years of blessings in the Bitcoin markets. To the moon and beyond, my friends. Long live the blockchain. And peace out till next time.